Good morning, traders. It's Wednesday the 4th of May and this is Mark Owen speaking from Phoenix Blue. It's a glorious sunny day here, looking over the Thames, and let's hope we can have a great week to go with it. Unfortunately yesterday we did have a bit of a shaky day, one losing trade, but we did send out an email to our clients and to all our students with a little bit of a warning on the dollar index, which is going to be our focus today. So we'll have a look at some live charts and run through why the dollar index is of focus. And it is a short week this week. We have bank holiday here Monday. We've got non-farm payroll Friday. So it is the email was more of an air of caution. It's a short week. FOMC last week. Non-farm payroll this week. Everything's data dependent now, re the US. So what the move that we saw yesterday, was it a shakeout, the market makers trying to get people out of dollars? Was it an actual sell-off in dollars? What was it? And this is why we need to be very, very cautious and let the results come out this week and get some clear direction. It's too easy to go and place all these trades, because when we go through the live charts in a second, you'll see that the dollar yesterday created either key reversal days on all of the pairs, or shooting stars, or pin bars, or high tests, low tests, whatever you want to call them. So every market yesterday, major and minor against the US dollar, created a key reversal day. So let's have a look at news that we've got today. So 9:30, so in just over 45 minutes we've got the PMI numbers coming out of the UK, forecast at 54.1. So expecting expansion still. We're looking for numbers over 50, but anything lower than 54.1, we're going to see a little bit of a continued sell-off in the sterling. At 1:15 we've got the ADP non-farm payroll, non-farm employment change from the US. 1:30 we've got trade balance from Canadian dollar, and then 3 p.m. and 3:30 we've got the ISM non-factoring PMI numbers. Again, with the US, it's expected an expansion, so we're looking for growing numbers there, 54.9, and then we've got the crude oil inventories at 3:30 p.m. So if you've got orders for Canadian dollar, be wary around 2:30, 3 o'clock, because it will be CAD that will move the most. Look, we've got major news today, tomorrow, Friday, so be careful. Just a quick reminder to all those that don't know, we've got a 2-hour workshop here in London on May the 18th. Where if you are interested in trading and you'd like to get to know the Phoenix Blue team and see if you want to come and join our trading family, please drop us an email on the website, which is now live. Register to attend the event. One of our team members will get back to you just to confirm your attendance and reserve your seat and give you the full details. In order to do that, make sure you leave your name and contact number. Alternatively, if you don't go to the website, please email us at info@phoenixblue.co.uk and we will come back to you confirming your seat reservation and your attendance. Okay, let's have a look at the charts. So we're going to have a look at live charts today. 1 second. Okay, so we're going to work our way through majors and minors today. So we'll look at Aussie dollar to start off with. Now, if we look, we're on the daily chart. I'm just gonna spread it out so you can see quite clearly. So yesterday's candle broke the previous day's high and then closed significantly below the previous day's low. Key reversal candle. We can see we're at some kind of support level now. But like I said, we've got big news today, tomorrow, and Friday. So let's get our direction from that, because bad news from the US and we'll probably see this market rally up here. Good news from the US and we'll see it sink. So we can then use these levels to trade from. Let's look at the Kiwi. So we'll come to the daily chart on the Kiwi, and again, excuse the noise over here. Let me just delete some of these areas of interest. Look at the Kiwi yesterday, formed double top, broke the high of the previous day's candle, closed below the low. Significant reversal candle, key reversal candle. Okay, we're going to come over to dollar CAD, where we'll see exactly the same. Another key reversal day, broke the low, closed way above the previous candle's high. Can you see this? It's all showing similar signs. Dollar yen yesterday broke the low, came up, closed at the highs. Nice long wick. We can see nice reversal candle. Low test candle here, looking for potential rally up into this area here. But are we trading any of these? Absolutely not. Why? Just because of the uncertainty. We want confirmation. We look at the euro, we can see operating within this channel. Again, look at this candle here. Huge long wick, sold off, closed near the low. But look at this. Huge resistance level here at 114.50. Huge resistance level. So is this going to act as support, or are we going to see something like this where it comes back through and we'll retest? We don't know. Okay, it is news dependent right now. It could shoot off. If the news is bad out of the US, we'll be at 120 before you know it, 125. If the news is good, we'll break down, we'll come back below this support level, and then we'll use it as resistance. So it's a time. There's so many candles we could look at buying or selling from yesterday's moves, but I think it's time we just sit on the sidelines, wait for our direction. And last but not least, we'll look at dollar Swiss. We can see nice support level here where we've got test, and we've got again nice long wick closing near the high, signaling that the bears came in, tried to break through all support levels, and the bulls came in at the end, expecting the market to push back up somewhere into this region here. We've also got this trend line here that it broke. So it was a test, retest, and again retest. Again signaling that the market is likely to push to the upside, but we're so news driven here that we're going to sit on the sidelines, and if it means we miss a trade or two, so be it. But I'd rather be, as one of my good old friends used to say, I'd rather be the pilot on the floor wishing I was in the air than the pilot in the air wishing I was on the floor. Trading is exactly the same. Don't get yourself into a trade that you can't get yourself out of. Okay, I just want to show you the dollar index as well now, just to show you how this correlates very, very nicely with Swissy. So we saw this long tail down here where the dollar index spiked, and then we got a nice bounce off it. We look at the dollar index here, we've got this trend line here that the market has been respecting. The market came down, broke through the dollar index key level at 92.50, and even went through 92. This is when I sent out my email to all our clients saying, look guys, it's time to be wary of buying dollars this week. Let's wait till after the week is out. Let's see what happens, and then commit once we've got direction after non-farm payroll, if we do get direction, that is. So please trade with caution. If you are price action traders, I know you're probably all going to be looking at all the majors and minors and selling those key reversal days, or selling the high test bars, or buying the low test candles, whatever it is. But please trade with caution, think about risk, and make sure you preserve your capital ready to fight another day. Okay, so that's it from morning update today. Predominantly focusing on the dollar index, understanding what news is coming out, and where we're going to position ourselves in the market. It is a short update, but the reason it's a short update is we're sitting on the sidelines until we have confirmation. Okay guys, have a great trading day. Enjoy the weather this week in the UK. It is meant to be a beautiful weekend, and we'll look forward to seeing you on the morning update tomorrow. And keep your requests coming in, and we'll speak soon. Bye bye.